Hello, my YouTube friends. Today I'm going to talk about an option strategy I'm using with Nvidia to get essentially more than a 20% yield on my investment. So stick around, it should be a pretty interesting video. Good morning. My name is Adam Khan, and this is Investing with Adam K. I hope you're all doing well. Welcome from beautiful Dubrovnik, Croatia. I know I did a video the other day from here, but as you can see in the background, it's awesome. We're here on the Adriatic Sea. Weather's awesome. It's really pretty. We were going to stay only 3 days. We've extended it to 9 days because it's such a nice place. Yesterday, we even went to Bosnia Herzegovina. Forgive me if I pronounce it wrong. I kept getting corrected. But I was shocked and amazed how pretty it is. Like I didn't know what to expect, and we really had a lot of fun there. So let's talk about an options strategy that I've implemented using NVIDIA, and at least annualized, if I'm able to continue to sell the options the way that I did already, I should be able to get about a 20%, a little bit higher yield on that investment just off the options. And then depending on what the stock does, either I'll have some profits or some losses, and really the markets could go either way. But you need a decent amount of money to be able to do the trade, because the way I did it in my head is I bought 300 shares of Nvidia, and then to start I sold one covered call, just one, for the August. I'll double check the date. I think it's the August 9th, uh, 131 call. So what that means is if the stock goes higher, I've already committed to selling it at $131 a share on 100 of the shares that I purchased. And I collected approximately $7 for that trade. A tiny bit more, but I'm calling it $7 to account for any of the commissions or anything else that might be cost in that trade. So I did double check, and yes, it was the August 9th call option. So if I take the $7, which amounts to $700, and I multiply it by 12, because August 9th is a little bit less than 1 month out, I get $8,400 revenue per year on $39,000 investment. Now, of course, options change, the markets move, and I'll go into what could happen and what may happen and things like that. But the $8,400 on a $39,000 investment is just over a 21% yield, which for selling just one of the calls on the 300 shares, I thought that was pretty attractive. So my thought on the trade is if the stock goes higher and keeps ripping the way it has been, I'll still have 200 shares that I'm long to really be able to get some real value in the stock continuing higher. If it goes lower, I'm taking off some of the risk by selling the call and collecting the cash. Now, I keep that money no matter what. And if the stock goes lower, my hope is there's enough ups and downs along the way, because Nvidia has been so much in the news, that I'll have more opportunity to continue to sell calls on the way down, collecting premium in hopes to offset the losses I may take. Now, of course, there's risk in it. I'm long a decent position in Nvidia, and if it really starts to reverse and goes quickly, while all I've collected is $7, even a $3 move is more than what I've collected, so I'll end up down money. If it does continue higher, again, I'll still have 200 shares, so I'll be able to participate in the up move of the stock, and I'll still get the $700, plus I'll make about $3 on the one call that I sold, because I bought it around $128 a share. If the stock goes higher and I get taken on the call, I will have an opportunity, if I would like to potentially sell a put down the line, and I'll make that decision as time goes on. I don't know that I'll do that, simply because I don't always love getting assigned the shares, even if I sell them at $131 and I'm fortunate enough to maybe sell an $125 put, so that theoretically, if you get filled on both, you've made that $6 on it, plus collected all that premium. What I don't love about it is if I'm still long an additional 200 shares and the stock starts going lower to just get assigned another 100 shares on the way down in case there's a real pullback. What I do like about it is I've collected what I think is a decent amount of money, and if I can continue to do that in another month, that really is good return on any investment. And then, like I said, I've covered the upside as well by only selling one of the calls. I was actually tempted to sell a further out call as well, and maybe sell an $145 call and get less of a premium. But my real thought is Nvidia has had some really big moves. If it really just keeps going, I don't want to limit my upside too much, which is why I only sold one call. I did like the type of return I'm getting by doing that, which is why I did it instead of just buying 100 shares and owning some of the Nvidia. But I guess it's a little bit more risk, but I feel like I've now turned it into almost a dividend stock. And again, as it goes lower, I'll have the opportunity to sell another call if it starts reversing. I hope that if it's going lower, there are enough bounces along the way to create opportunity to sell it at a decent price. But I guess we'll see, and I'll keep an eye on it. The other reason I did this is from what I've talked about in other videos, I'm still bullish the economy. Now, I did notice that this week it seems to be like things are transitioning out of the tech industry into the more normal stocks, like the Target trade I have on. Target's done exceptionally well. UPS has done well. I've noticed all of the Pepsi who came out with bad earnings. They started lower but ended up reversing and doing well. And I'm presuming all the other companies that are your general run-of-the-mill companies are starting to have a really good move. I don't know if this transition will continue, and it really could because it seems like CPI and PPI came in a way that makes it feel like the Fed may be able to start cutting rates. But again, these are just things we'll have to see as time moves on, and nobody can predict the future. But it seems like people are rotating out of some of the tech stocks and maybe moving into some of the more traditional companies that they've been avoiding for a while. A lot of these I felt were undervalued, so it could be something that continues for a long time, but it could be just a short trade that we then see the tech stocks start moving up again as well. And of course, we could see the economy really slow and things start to go lower and really throw me off in terms of what I think is going into the market. What I really think is we're in a bull market, and I don't want to fight the trend. The trend is your friend, is what they generally say. And until something changes in my mind that actually changes the direction of the market and makes me feel like it's actually going lower, I don't want to fight the general direction of the market. I would expect to see scary pullbacks if you have tech stocks like you would have seen on Thursday. But, if you're diversified a bit, maybe it balances out and you don't have such a big down move. Or maybe it's not so scary because you should have some things that did okay on that day as well. It's kind of interesting to me that Friday was the day that the stock market really rallied a good bit, considering PPI wasn't as attractive for what people have been looking for. They've wanted to see a slowdown, and CPI came in really weak, which should have made the market shoot up, but it didn't. And then PPI comes in and it's not the same way, and the market has a huge up day, which is also why I'm bullish. I think almost right now, no matter what comes out, when the market has a correction to the downside, it just seems like an opportunity to be buying things because they seem to reverse and start going higher again. Now, the current moves are not a prediction of the future. There's no way to know. And as I always say, this is not financial advice. I'm just sharing what I see and the information that I have. You guys need to do your own research. You need to seek a financial advisor. You shouldn't be listening to me to make financial decisions in your own portfolios. I also keep watching these guys that are really bearish, whether it's stocks or real estate or whatever it is they're looking at, continuing to tell people not to invest. And they don't use those terms, but they keep talking about data points that show how scary the economy is. Look, the economy generally is scary, and there's a saying of markets climb a wall of worry. Like, I think that's accurate, but companies are continuing to make money. The ones that have rough earnings, they get punished so hard that they push them to where they're undervalued. And I think that creates a different opportunity. I don't think we're having some huge recession where the economy is just going to collapse. I also think as long as people are scared of that, that's a general good thing. If people aren't investing because they're nervous that the economy is going to collapse and the markets are continuing higher, it's more when they're not scared and they're putting all their money in because they just know it's going to keep going higher that you should worry about it. What is it that Warren Buffett says? Be greedy when people are fearful and be fearful when people are greedy. I don't think they're really greedy right now. I think there's a lot of fear out there. I do think some of the guys who do the analytics, I think some of them are bullish and they see some of the things I talk about. Tom Lee, I think that's the right name, made a prediction of the S&P being 3 times higher where it is now from 2030. Maybe it's a little bit optimistic, but it's a little bit of where my head is as well. I made a comment on a real estate guy's page that, for the past 2 years, he's been talking people out of buying homes and he's been talking out people out of making investments and savings. And maybe it's not the greatest advice to tell people not to invest because the market's scary. Because in the meantime, they've missed a lot of move in the market, and the response I get is housing's only up $6,000 on average over the past 2 years, and how wrong I am essentially. Well, maybe he's right, but maybe he's wrong. And I know on paper that what I've seen for my friends and clients and myself has been a big increase in asset values, whether that's equities or houses or whatever it is. And I think the inflation is legitimate. I think it's going to slow, and I don't think you're going to have the same types of returns we did the past few years. And maybe we get overheated and have a correction, but I'm not going to try to time it like that unless everywhere I go, everyone I talk to is talking about stocks or real estate or whatever investment it is that's just going higher. That isn't the case. When I think about the dot-com bubble, and this goes back to when I lived in Chicago, I'd go to visit a friend, and a lot of people lived in high rises at the high rise. And the doorman would talk about the new internet stock that he saw going higher. The person on the cab ride over would be talking about the one that they saw. You'd go to the bar, and so would the bartender and everybody else. And you guys know me, I hope everybody is investing. So this is not a slight on anybody's position or what they should be doing or anything else, because I know it's gotten taken the wrong way once or twice. But when everybody everywhere is talking about their stock investment, it's probably gone too far. The same thing in the '08 housing or '06, '05, '06, '07. Everywhere I went, I was playing cards at the casinos, and the dealers were talking about their houses that they were buying and how it was just going straight up and they were making tons of money. When everybody is talking about the markets, that's when I think it's gone too far. I don't find myself in positions where I go out to a restaurant and the maitre d' or the waiter or the waitress or whomever it is talking about their housing investments or their stock investments. Again, I hope that they are all investing in this stuff. I think saving and investing in your future is a great thing to do. But I don't see it as fear of missing out and over exuberance and over excitement. I see a lot of nervousness out there, which tells me we still have room. To wrap that back around, Nvidia has been the one that's moving the most. And while maybe it's a little overvalued, or maybe it's a lot overvalued, and maybe they start to slow and have a big correction, in the meantime, they're the one that's really driving it. So I thought it's the best one to kind of make a trade on. Now, this is not one I'm really investing in or want to own for the next 10 years because I'm a little bit nervous about it. And the type of move that I don't want to get over aggressive on. But I do want to be involved in it if it continues. Now, keep in mind, it's okay if I lose on this trade, and I understand those risks, which is why I say you need to do your own research and stay within the comfort levels of where you are for your portfolios and everything else. I don't want to see people take on too big a trade and take on too much risk simply because I'm talking about it or considering it. If it goes the wrong way, it's okay. It's no big deal. But I'd like to have it on and see how it works out. Anyway, if you haven't done it yet, do me a favor, hit that subscribe button, smash the like button, make some comments, tell me what you're looking at and what you like right now. It was a really interesting week in the markets. And my God, I couldn't believe what Bosnia Herzegovina looked like. We went to these waterfalls. Maybe I'll do some pictures and pictures. I did a short on one of them. We went to the old town, and it was really shocking. Like what I pictured was a war zone. I know it's been over 20 years, but uh, it's beautiful. The landscape's like driving through Colorado, but meanwhile, as you first get over the border, it's on the Adriatic, so it kind of looks like it does in the background here. As you move further down, is when it looked like we're driving through Colorado, but there's all sorts of lakes and things like that. Then we get to the old town, which was super cool with all the vendors and everything else. And it's got this old bridge that people jump off of. And from what I understand, it's the hottest location in the Baltics, but it has the coldest river running through it at the same time, which is this interesting dynamic. Then, after we left the old town, we went to the Kravis waterfalls, which were absolutely stunning. I mean, it's these three waterfalls that all come in the same place. They're not like huge like Niagara or anything, but it's just really pretty and it feels like it's in the middle of nowhere. Anyway, it was super cool. I never would have expected it. So that's why I'm blabbing about it. Again, don't forget, give a thumbs up, hit that subscribe button, and tell me what you think or where your travels have brought you. Thanks, guys.